Hi everyone, welcome to CF Benchmark's Index Bytes. I'm Thomas Adosi, Head of Product at CF Benchmarks, and today I'm joined by Christian Isaac, Senior Product Manager at CF Benchmarks. Hi Christian.
Hey Thomas.
Christian, CF Benchmarks is launching a brand new data product suite, CF Factor Intelligence. Can you please explain what this new product suite is and why it matters?
Absolutely. Factor Intelligence is our institutional-grade factor data product for digital assets. It's based on our published research paper, a factor model for digital assets that we at CF Benchmarks published in December of last year, so quite recent. And now this research is fully industrialized into a usable and scalable data suite. And so with this, it brings the discipline of traditional asset pricing. Think of Fama-French factors, factor portfolio allocation, risk attribution, and so on, but to digital assets and for the very first time. So whether you're a quant fund, an asset manager, or an ETF issuer, this product allows you to understand, decompose, and even forecast asset behavior using an institutional-grade factor model.
Got it, Christian. So how is this new factor data product suite structured, and how can clients access it?
Well, the dataset offers three core components. The first one are factor scores. These show the relative standing of each asset on metrics like protocol fee growth, active users growth, token turnover, and many others. The second one are factor returns. These represent the return of long-short portfolios formed on each factor, and they're used to identify what's actually driving performance in the market. So users can, for example, run regression or do risk attribution based on this data. And last but not least, the third component are factor loadings. These show each asset's or portfolio's exposure to the model's factors, giving a view of its exposure through time. And of course, this is all delivered as a clean and transparent dataset with both cumulative return views and per asset scores, which is ideal for integrating into models and dashboards. So clients effectively can access these data via REST or WebSocket APIs or via recurring reports.
Understood. So with this new data offering, we're really providing a toolkit for creating factor-based crypto strategies and for understanding crypto strategies through that factor lens. Now, who's this most relevant for, and what can users actually do with this data?
So this is for institutional users who want to bring structure, insights, and rigor into their crypto workflows. Some use cases include risk management teams that can use factor returns to decompose risk and identify what's driving performance and volatility in their portfolios. Quant funds are another example that can build trading signals using factor scores and returns, especially useful for detecting regime shifts in factor leadership. Portfolio managers can also analyze, for example, factor tilts, optimize exposure, and avoid unintended risk concentrations. And last but not least, ETF and index providers can construct smart beta or style-based products using these factors. So it's all about bringing explainability to crypto returns, moving from narratives to data-driven insights. We are helping clients decode digital asset returns from black box to factor exposure.
Okay, so it's also about debunking this myth of the random walk of crypto returns, suggesting that crypto returns are just white noise without any fundamental drivers. Now, what is the broader relevance of this, i.e., how does this compare to data products and derived investing vehicles available in traditional asset classes? And basically, where does this sit in a cross-asset context, and what is the future vision of this product?
Well, put simply, there's nothing else like this. This is the first institutional-grade factor model built specifically for digital assets. In traditional finance, factor models are foundational, especially in equities. Institutional investors have long utilized factors like value, growth, momentum for portfolio construction, for risk management, or for performance attribution. So these models aren't just theoretical; they're embedded in widely adopted investment vehicles. For instance, the Vanguard Value ETF and the Vanguard Growth ETF are prime examples, each managing hundreds of billions in AUM. These ETFs allow investors to gain targeted exposure to specific factors, reflecting the practical application of these models. And we believe that this is the long-term trajectory for digital assets as well.
Thank you, Christian, for that overview. The CF Factor Intelligence product suite is now live. If you would like to learn more, please visit cfbenchmarks.com. Until next time, thank you for watching CF Benchmarks Index Bytes.